and welcome to this episode of China Edge, brought to you by the SupChina team. I'm your host, Lizzie, an MIT-trained economist turned journalist here at Wall Street TV, who covers China and its relation to the world. Here at China Edge, we go beyond the headlines and guide you, our audience, through the jungle of Chinese regulations. We go deep into industry trends and identify challenges and opportunities in the Chinese market. Please join our conversation every week for interviews and analysis with the most knowledgeable minds on China. Also, stay tuned for future special panel sessions with Kaiser Kuo, host of the Sinica podcast, and Jeremy Goodkorn, editor-in-chief of SupChina. Concerns over statistical integrity in China aren't new. How should corporate CEOs and hedge fund managers understand the true state of the Chinese economy? Joining me today is Shehzad Qazi, Managing Director of China Beige Book International. Thank you so much, Shehzad, for being here with me.
Thank you for having me on.
So, Shehzad, can you please briefly describe how China Beige Book is able to gauge the actual state of the Chinese economy?
Yeah, one of the biggest problems that investors or corporate decision makers face inside China, as we know, is the lack of reliability when it comes to official data. And other than China Beige Book, of course, the near total absence of any private data sources that can help you understand how the economy as a whole is performing. And these two reasons are actually why we created the company, at this point, well over a decade ago. And one of the things that we truly believed in doing is asking companies on the ground, how are they performing? And reporting those results out rather than relying on any intermediaries or any type of other statistical bodies or statistical entities. Today, we survey over 4,000 Chinese companies in any given quarter. We cover every major sector of the economy. We have state firms and private firms, large firms and SMEs, and we cover every part of the country geographically, walking away, therefore, with the most comprehensive, in-depth, large-scale private data on the PRC. And it is the direct tracking of companies to being able to access that, which is at the cornerstone of China Beige Book, and therefore our ability to truly understand what economic conditions are like.
Just described. Right. So what does the CBB data tell us about China's Q2 economic performance based on what you've seen so far?
Q2 is showcasing to be just absolutely terrible since at least it's the worst, hands down, the worst quarter since the initial COVID downturn in Q1. Headline growth has gotten absolutely pummeled. Every major sector, every part of the country, almost every major headline metric that we track has slowed compared to the first quarter. But most parts of the economy, almost all parts of the economy, are actually now doing worse than they were a year ago when China was still on the path of recovery from the COVID-induced slowdown. So the conditions are not very pretty on the ground right now. There's a lot of pain, and which is, of course, almost exclusively the direct result of the lockdowns that you saw take place starting in March and then intensify through the rest of the spring after what we saw happen in Shanghai, the de facto lockdown in Beijing. It has really wreaked a serious amounts of chaos and havoc on the economy.
Right. And speaking of the importance of Q2 data, it seems very problematic for Beijing this year to see GDP growth collapse in such a sensitive political time, especially for Xi Jinping himself. Will stimulus measures be able to propel a rebound in the second half of the year? If not, what will be the ultimate headline number of GDP growth be this year?
Yeah, one of the great myths I think right now in the market, and it has been around since last year, is that there is about to be big bang stimulus in China, and this myth has taken different forms. The current one being that we're going to get big amounts of monetary stimulus in China, and that we're also going to see fiscal stimulus in China. On the first point, there's absolutely no sign whatsoever of monetary stimulus in the country right now. You've seen moves, certain benchmark rates being moved in prior months, reserve ratios being cut before that, but that has had absolutely no impact on corporate borrowing whatsoever. It continues to remain at one of the lowest levels in China Beige Book's 10-year history. And a core reason, by the way, for that is incredibly high rates of interest. Loan rates are incredibly high, and it appears that whereas there may be political pressure on the banks to lend out to companies, rather than just outright rejecting loans, what the banks are doing is just charging such an incredibly high cost. The cost of capital is so high that it's basically discouraging companies from borrowing. As far as fiscal stimulus is concerned, once again, we track it through our transportation construction subsector, and we don't see any evidence as yet of there having been much of an impact on the fiscal stimulus side. Again, that is very much tied into the lockdowns. Now, this could change if you were to see lockdowns being lifted and that and not be reimposed, rather, I should say, for the coming weeks and months. Then you may see some amounts of fiscal stimulus, some amounts of infrastructure development take place. But I don't suggest that companies and investors be betting on any type of large scale monetary stimulus, or really think that fiscal stimulus will be so big that it will have a meaningful impact on growth this year. Now, one of the things that we are very clear about is that we're not in the business of predicting the GDP number, because as we all know, it's a political figure. It's not an economic figure. But at this point, the true conditions on the ground absolutely do not suggest that we're going to get anything close to 5.5% growth. And really, the big problem that I'm looking forward that I foresee in the second half of this year is probably very serious amounts of data manipulation to make it seem like perhaps the economy got close to, even if it didn't hit the original GDP target.
Right, and just to zoom in on sectors a little bit, what's your assessment of the current health of China's property market and tech sector? Are we going to see an inflection point this year, given the macro situation in China?
The property market actually started out the year on a positive footing. We actually saw some amounts of recovery taking place, especially in the bigger cities, especially when it came to sales, when it came to prices. Those were positive signals. However, in the aftermath of what happened in the spring, the property market has also been under severe amounts of stress. It took a very serious beating in the month of May. Some of the parts of pain continued into June. But right now, for example, the housing market itself is performing incredibly poorly whether you look at sales, whether you look at pricing power, whether you look at profitability. So property is going to be under a lot of strain for the foreseeable future. That much we knew. But even the nascent recovery that we were getting at the beginning of the year is now over, which means that property is going to most likely continue to struggle through the rest of the year. As far as the tech sectors are concerned, I think that is again, when we talk about what are the myths, on Wall Street and so forth. Another big idea that has taken popularity recently is that the regulatory crackdown in China has eased to the point where it's actually now a good time to get into Chinese tech stocks, which is where you've seen some of the rally in Chinese equities and so forth over the course of May and now into the early summer. I think this is incredibly premature. And companies on the ground themselves don't feel that somehow the era of regulatory uncertainty and scrutiny by Beijing is a figment of the past. I think the tech sector remains under tremendous amounts of pressure. I think right now the focus has shifted in Beijing. The party is much more interested in stabilizing economic conditions as it heads into the fall party Congress. But I think we shouldn't as yet assume that the era of regulatory crackdowns and strict guidelines being built around how these companies are able to operate is behind us.
Thanks for watching. You can find out more about China's business and economic landscape by subscribing to our newsletter, joining our premium Chinese business intelligence database, and of course, watching this show. Find out how to do all of that in the summary section of this video.